out. I used cover calls 2 reasons. One, when the juice or the premiums on the cover calls are so high that I look at it as an overall trade through expiration. So when I did the we ride trade, right? I'm looking at that until June 20th. My return, if I do get called away, is going to be about 55% for a month. That's very capital efficient. But if it was some stock that I'm going to take few pennies in, right? What's the point of that? Now, the other way I use cover calls is for repairing positions, because sometimes you're going to buy something, it's going to go down on you, right? That's when you just kind of keep selling calls and try to repair it, try to lower your costs. But then imagine if you owned United Healthcare, you sold cover calls. Where does it get you? Where is it going to get you? Let's say you bought United Healthcare at $400 after it dropped $200, right? And you sold $400 calls. Where are we? It doesn't make any difference, right? I don't like it unless I get like really, really worth my money out of it. The only reason I do it is because I'm able to compartmentalize a certain stock with certain options. And I look at my return. If I were to get called away, what it'll be? I would never write cover calls unless over a month period, my return is going to be at least 25 to 30%. If it's not, that includes capital appreciation, by the way. If it's not, and on the other side, is it going to lower my cost basis at least another 20%? While on WRD case, it's doing both. If I get called away, it's 55%. If I don't get called away, my cost is 7.5. It's going to lower my cost basis at least $1.50 range, which is 20% range. So in those instances, I will do cover calls. But otherwise, be a man. Hold the damn stock, man. It is definitely capital inefficient, especially in bull markets, by the way. So
yeah, right.
Yeah. Like you have issues like that, right? You have the hymns and whatever, right? Yeah.
Oh yeah, I'm stuck. My big mistake on that is I had leaps and I got out of them after made a little profit.
Yeah.
And I should have held those.
Yeah. Give me 1 second. Can I put whose site? Quant Data? Just go to Vic. Just go to go Google Quant Data Discord channel, and then you'll get it. Yeah. So that's one question. What else you got for me?
Oh, that's about it for me.
That's it. Yeah. So Tasty. Seems like the channel that you were on, or you're still on, probably. I don't know how he's doing. I haven't been following him, to be honest with you, because he fell in love once he joined Tasty. He fell in love with these strangles. And when the market's ripping like this, those strangles are going to absolutely just kill you. But you did that a few times, right? Those.
Oh yeah.
Yeah, selling calls, selling puts. Is when the velocity of the moves are this quick, right? You're gonna get stuck, and you're gonna most likely get whipsawed, actually, because then you're gonna move the put up and move the call up, and then it'll top, and then it'll tank, and then now your puts are gonna be in trouble. So you're gonna getting hit with a right cross and a left jab constantly. I'm going you need to manage those. You cannot and then what you do is you go further out to take more premium. You go further out. Now 1 month trade now has become a 6-month trade now. Now you got to be glued watching it, and they keep going against you. And then what? You're going to go out another 3 months. And I'm going at some point they're going to expire worthless, but we just created so much unnecessary headache for ourselves that We started with a 1 month objective or 40-day objective, and now we're at like a 6 month. Like, how did
Yeah,
that happen?
I don't like them either.
Yeah. I mean, selling calls is really, really tough. Look what's happening, you know? Selling naked calls. Selling calls is fine, I mean, but selling naked calls is tough. Very tough. There's no limit to the upside. There's no limit to your risk. I mean, seriously.